Hello and welcome. Thanks for joining this discussion, brought to you by the experts over at Pro Tax Accountant. Today, we're diving into a question that can make pretty much any taxpayer in the UK a little nervous. How in the world does HMRC actually decide who they're going to investigate? Okay, picture this. You're sorting through the post, and you see it. That classic brown envelope with the HMRC logo in the corner. I mean, just the sight of it can send a shiver down your spine, can't it? That fear of a tax investigation is very, very real, but it doesn't have to be something you lose sleep over. So our goal today is pretty straightforward. We're going to pull back the curtain and show you exactly what catches HMRC's eye. Once you understand what they're looking for, you can make sure you're compliant and honestly just get some peace of mind. We've got a really clear plan for you. First up, we'll meet HMRC's incredibly powerful digital detective. Then we'll get into the biggest red flags that can trigger an investigation. After that, we'll see who's most likely to be on their radar, and I'll give you a simple compliance checklist. And finally, we'll talk about when it's time to get some professional help. Right, let's get straight into it and talk about HMRC's secret weapon. And nope, it's not a person, it's a hugely powerful supercomputer system, and its name is Connect. So what on earth is Connect? Well, think of it like a giant digital spider's web. Its main job is to constantly gather and compare financial data about absolutely everyone from tons of different places. It's looking for patterns, inconsistencies, basically anything that just doesn't quite add up. It's the reason it's getting so much harder for discrepancies to go unnoticed. And when I say it pulls data from numerous sources, I really mean it. Connect is looking at your bank accounts, your credit card statements, property records from the land registry, info from your employer. It even checks data from e-commerce sites like eBay and, get this, your public social media profiles. If you have offshore accounts, it's looking at that too, through international agreements. Just to give you an idea of the sheer scale we're talking about here, the Connect system has access to over 1 billion individual pieces of data. Yeah, that's a B for billion. It is constantly scanning, comparing, and flagging anything that looks even slightly out of the ordinary. It just shows you how powerful their surveillance has become. Okay, so we know the tool they're using is incredibly powerful, but what actually makes it ping? Now let's look at the tripwires that could land you right in HMRC's sights. The first huge red flag is a massive, out-of-the-blue jump in your income. So let's say your small business usually turns over about $20,000 a year. Then all of a sudden, you declare $100,000. If there's no obvious reason for that quadrupling of income, Connectus is almost guaranteed to flag it as an anomaly that needs a closer look. Slow, steady growth is fine. Huge, unexplained spikes are not.
Expense claims. This is another classic minefield. Let's take a freelance designer in London, for example. Claiming for new software or a fair portion of their home office bills, totally normal. But claiming 30,000 business miles in a single year, that's nearly 600 miles every single week. Unless they can prove they were driving to visit clients in Glasgow every Monday, that kind of claim just screams, investigate me. And here's a little did you know for you, and it's one that catches a lot of people out. If you're declaring a fairly modest income, but your Instagram feed is a highlight reel of new luxury cars, 5-star holidays, and designer watches, well, HMRC can and absolutely will use that to ask the question, does your lifestyle match the income you've declared? Okay, so we've seen the triggers, but is everyone's risk the same? The short answer is no. Some people are definitely more likely to be investigated than others. Stay with me. The next part might surprise you as we look at who statistically is most likely to find themselves on HMRC's radar. Statistically, HMRC tends to focus its energy on a few key groups. Small cash-in-hand businesses are high on the list, mainly because cash is just harder to trace. Freelancers and contractors are watched very closely for something called IR35 compliance. That's the rules to check they're genuinely self-employed. Landlords are often checked for undeclared rental income, and of course, high-income earners are monitored for any aggressive tax avoidance schemes. And yeah, if you have offshore accounts, you are definitely on their radar. To make this all feel a bit more real, let's look at the case of a self-employed consultant. He got that dreaded brown envelope. Why? Not because he was committing fraud, but simply because his expenses were a statistical outlier. They were just unusually high compared to what he'd claimed before and what others in his profession were claiming. And that's a really crucial point. You don't have to be dishonest to get investigated. You just have to look unusual.
So let's break down what happened. He had claimed £3,000 in travel, but he just didn't have the paperwork to back up all of it. So HMRC disallowed the undocumented part, which added £700 back to his taxable income. A similar thing happened with his rental expenses, where a few items weren't quite right, adding another £500 back. So, after all the stress and worry, what was the final damage? The total extra tax he had to pay was just £240. And because he cooperated fully and the mistakes were genuine errors, not deliberate, he didn't face any penalties. This is a huge takeaway. An investigation isn't always a catastrophe, especially if you handle it the right way. That's not all. Here's where most people go wrong. They hear these stories, they worry, but then they don't actually do anything about it. So let's shift gears from the warnings to the solutions. How can you stay off HMRC's radar in the first place? It really boils down to this simple 4-step plan. Number 1, and this is the big one, keep perfect records. 2, be honest and sensible with your expense claims. 3, keep your business and personal money completely separate. And number 4, always file your tax return on time. Filing late is such a needless and easy to avoid red flag. Now here's a pro tip focusing on that first step, because it is by far the most important one. Use digital accounting software like QuickBooks or Xero. It's an absolute game changer. Use a simple app on your phone to track your business mileage accurately. Open a separate business bank account. It makes life so much easier. And get into the habit of scanning and saving every single receipt and invoice. Good records are your ultimate defense. You know, following all these steps is going to put you in a fantastic position. But for that true, deep-down peace of mind, especially if your finances are a bit complicated, nothing really beats having an expert in your corner. So let me just ask you directly, after hearing all of this, are you feeling a bit worried about your own taxes? Do you have that little nagging feeling in the back of your mind that maybe something isn't quite right or that you could be at risk? If the answer is yes, that's completely okay. The crucial thing to remember is that being proactive is your best possible strategy. Getting expert advice isn't a sign of weakness or an admission of guilt. It's a smart, protective step to make sure you're totally compliant and ready for any questions that might come your way. And that is exactly where ProTax Accountant can step in to help. If you need expert advice on this topic, or really any other tax issue, you can reach out to them directly using the details you see on the screen. And for more clear, easy-to-understand tax guidance, make sure you subscribe to their YouTube channel. Thanks so much for watching. Remember, understanding the rules isn't about being scared, it's about being confident.